All right. Hey guys, welcome back. This is class 6 of the day trading class. We're covering the first strategy, which is the opening range. That's the very first strategy that I look at trading every morning. We started it last week and we're going to try to finish it up this week. Try to go over some of the more specifics. So, because earnings season is just around the corner, like right now, we just don't have a whole lot. We There's just not a lot reporting. So if you look at, I think I showed you this yesterday. This is the earnings calendar for this week. For the ones that even matter. Tomorrow we got Delta reporting. That one doesn't move all that much. We'll just have to see. There may be something else that pushes it that gives us a good move. And then Friday we have FAST and Infosys. I'm not sure about Infosys. I've traded fast before. I've traded Delta before, but we'll just have to wait and see what this market is going to bring us. But it's good that we get this down going into earnings season. And then the next strategy is going to be the trend continuation. So, you guys, if you like, you guys that see this on YouTube, if you like the strategy, if you like the flow and the way I trade, the stocks I trade, the other two strategies, plus we've got a couple more, you want to come join us. Because these are the exact same strategies I trade every day. They're no two trades are the same. The setup may be the same, but we look at things a little differently. The chart looks differently. And so that's why we do it every day. And we do it live so you could see the differences. And when I do something different on this stock than I did on the other stock, you'll know and understand exactly what I saw that made me do something different. And that's the way you're going to have to kind of manage it. So, we will see. I'm ready for next week. That's all I can say. All right, so this morning. Now, those of you that were here this morning, most of the people are here in the morning. By the afternoon, everybody, they either gone to work or gone to sleep if they're overseas or whatever. But, one of the members, and I blocked his name out. He did say I could use it. Those of you that were here, you know who it was. But just for privacy purposes, I'm not going to post his name out there. But I like to address every question, every concern, every thought that anybody has. I like to address it. Because honestly, whoever it is may not be the only person feeling that way. And listening to this just brought back memories of the way I felt when I first started. And I feel it's really, really important to address these things as they come about. So, he asked how long I was doing the $2,500 account size. And as you know, I withdrew a little bit more. I took out, $2,500 more than I used to. So instead of starting with $5,000 every month, I start with $2,500. This is going to force me to take smaller positions and trade stocks that most of you guys are going to be able to trade. And that's the whole purpose, so that you can connect to what I'm doing. If I'm trading Apple and you can't trade it, it's going to be hard for you to connect to that, because you have to trade Apple a little differently than you trade a $50 stock. If I trade Netflix or if I trade Facebook, I'm going to have to trade these stocks that are close to $200 or over $200. I'm going to have to trade them a little bit differently. And you have to have a larger account size. And you're going to see as we talk about some of these elements today, why I do the things that I do. And he says, as a trader, you should be able to take advantage of all trade positions. That is not true. I used to think that. That's what I used to believe. That is not true. As a trader, you're going to have to pick your spot. You're going to have to focus and find your place in this trading world. For me, my sweet spot, stocks between 20 and 150 bucks. That's my sweet spot. Now, will I reach out of that? Yeah. I'll trade, like I said, I'll trade Netflix. I'll trade Facebook. I'll trade Apple. Stocks that are over my sweet spot, because I've learned how to trade those and I've graduated. So when my account size would grow to that, yeah, I could do that. But when it's not, you can't. And if you are a brand new trader, the worst thing you can do is try to trade everything out there. You have to pick a spot. You have to learn and develop your skills, or else you'll never be consistent and you'll never make any money. So that's why you see some days I may not take a trade, or I may not do well. And then some days people may post that they did $1,000. But we're not trading the same stocks. Sometimes most of those people are trading small caps that I feel are very, very dangerous. So I just don't trade those. But you've got to focus. You got to pick a spot. What do you identify with the best? What's the most comfortable to you? And then keep on going. That's what you got to do. And he said he felt like he's missing out on other trading opportunities if we're limiting to smaller ranges. Okay, 20 to $150. That's not a small. That's about where most of the stocks are going to trade. Now, in the beginning of the month, when I'm around 2,500 bucks, I can go from 20 to 100. But the whole range of stocks are going to be on my scans. All right, so we're not limiting that. That's going to be there. Those stocks are there. But if I'm not in a position to trade it, I can't. Like at the beginning of the month, I didn't trade Apple, Facebook, Netflix, or any of those. It wasn't until I got an extra, $1,800 to $2,000 in my account, and then I could start trading these other stocks. That's what you're going to see us doing throughout the month as our account size grows and our buying power increases. Then I can trade stocks, $120 stocks, $130, $140. I could do that. But you got to see the progression, and you have to be disciplined and understand that you can't trade those. I know, and that's why staying in a simulator is so detrimental, because in a simulator you can trade whatever the hell you want. But when you go to your account and you're trading only what you have, you're stuck, you're handcuffed. And if you're not used to trading that way and accepting that grouping that you have to trade within, it's going to be very difficult for you. So, and he was saying last week I traded Roku. This week you're not. Now I am trading Roku. I actually traded it today. That son of a bitch. But I just don't like day trading Roku. I like doing it for an all-day hold. And as you'll see today, we'll show you exactly why I don't like day trading Roku. But it is on the table. It was the only stock on our watch. So, that's what we did. But hopefully you understand why. The small cap stocks, those stocks under $10 don't work with the strategies I trade. They just don't. Some of them do. Some of them will give you huge moves, and those are selective. But for the most part, stocks under $10, I stay away from because the moves are too small. You have to size up. And to me, when you size up, you increase your risk. And I don't like doing that. So that's my personal opinion, and I stay away from that. So stocks over $10 on up, I think can work. You just have to make sure they meet the parameters. And that's what we're going to focus on today as well. All right. So, our community, number one, is about learning. Okay. It's not, I don't use a chat room for a scanner or to find trade ideas and all that stuff. That's not what the education community is for. It's about learning how to trade. Do you get trade ideas from people? Yeah. That's a secondary thing. But the primary goal is for you to learn how to trade and to grow into your own independent trader where you're generating you're scanning, you're finding the stocks that meet your parameters in the market, and then you're attacking it every day. And you need no help from anybody else. That's the goal. And as a teacher, that's what I like to see. I like to see people graduating into that fold. So that's what we're going to be focusing on. That's the focus in this community. I want you guys to learn how to trade. I can't tell you how many people have gone broke following everybody else. It just doesn't work. All right. So, anybody have any questions on that, or any comments, or if you want to, you can email me or whatever. I'm always just an email away. All right. So, but anytime you have any questions, any concerns, feel free. I will definitely address them. Because I've been through it. I've been there, done that. Been there, done that. But I think we have the largest sweet spot out there. I mean, we have a big range of stocks that we can choose from every day. All right, so this was today, and I don't like to trade Roku at opening range, and I kind of missed the entry back here, and then we pulled back. I was looking for a deeper pullback, and I didn't get in here. I was just frustrated because I didn't get what I wanted to see. I didn't get to see what I wanted to see. And so waited, and then it looked like we were breaking down here. We hit this looked like the top. We bounced. We put in a lower high. We couldn't push over the 9, and as we sold back through, I'm like, maybe we're rolling over here. And I was looking for it to pull back to around this level here. I figured if we bounced, it would bounce around here. Never did pull back. The 50 just kept screaming up. The 100 everything just kept screaming up. And I end up, stopping out here. Once we broke through, my stop was right up above that, and then just flipped it long because I realized I was the biggest sucker on this fake out. And this is what this is what they do. You see this happen a lot. It was a big bad bear trap, and I fell for it. But it's not the first time, and it won't be the last time. But we manage it, and we trade what the market is giving us, and that's kind of what happened here. So ended up just kind of breaking even today. I think I'm down whatever commissions were, like $24. But it was just a really, really rough day. I just don't, like I said, I don't like trading Roku. I really don't like it. Trading it with a smaller account. But once it slows down and I get a secondary move, I feel more comfortable. But it just kind of flatlined once I got in. Didn't really do much. So that was my day. All right, so we are well into the day trading class. We are in the opening range trades. We're going to try to finish those up today. But every day is an extension of this class, because I look to trade the opening range strategy every morning, and each one's going to look different. So we're going to learn from each one. Now, just to remind you guys, I belong to the KISS school of thought, keeping it simple, stupid. Now, the reason I focus on simple strategies is because, contrary to popular belief, all of these complex strategies do not equate to profitability or consistency. As a matter of fact, the more moving parts a strategy has, the more components a strategy has, the harder it is to interpret, execute, and manage, what makes it less consistent. You end up all over the place. And so what I try to demonstrate every day is staying consistent, not changing up, doing the same thing every day, taking what the market gives us and moving on. And at the end of the week, at the end of the month, we're putting a little bit of money in our pocket. That's the key. That is the key. Now, I'm going to share this with you. My door popped open. I'm sorry. This is an opening range trade, but it is not the 5 minute. It could be the 5 minute. It's basically the same. But this is what he based off of a 1 minute opening range. Where the heck is it? Okay, here it is. All right, the 1 minute opening range. Here's the 1 minute opening range high right here. And then there's the entry. This solid line is a 5 minute opening range high. All right, so that was the entry. And here, this chart was a little bit crowded for me. Now, I admit this was a little bit too crowded for me, which is why I didn't take it. I was looking at it. The stock was on my one of my montages, because we were talking about it this morning, but it didn't have any volume prior to the open. It didn't have enough volume, and then it was really crowded in here. But it worked out, and you see this happen sometimes. For me, I would have had to wait until we got over the 200. But if you are trading and you're building your trade plan, you have a logical plan and you have logical targets, and you execute, excellent. Excellent. And so I started him out with $1,500 at the beginning of this month. And so I think this is the first trade he took. But and this was kind of an all-day thing, all through school. So it can be done. All you have to do is just focus on the fundamentals. Don't get caught up in looking over here, looking over there, looking up and down. You'd be surprised how many messages I get saying, well, this person over here is looking at this stock. Why aren't you looking at this? This person in this community is looking at this stock. Why aren't you looking at it? All day long. That's what I get. But sticking to what made me is what got me to where I am right now. And I've made I've made over $1 million. Now I can't keep it. I didn't put it in the bank because Uncle Sam got most of it. But I know I'm going to be a legit millionaire before long. I'm going to have that in the bank. But it's not going to happen overnight. And I'm not going to ramp it up and try to trade outside of my comfort zone just because. You can't do that. You got to get comfortable. You got to do what feels right for you. And in the end, it may not be exactly what I teach. It may not be identical. You may throw some things in. You may take some rules out. You may add some rules here. But the key is it'll be yours. You'll be comfortable trading it. And you can justify everything that you do. And when that happens as a teacher, I tell you, that's the best feeling in the world. The best feeling in the world. So that's what I'm looking for, guys. Out of this is what I'm looking for. That was the 1 minute chart. And that's an opening range strategy. It's just based off a 1 minute chart. He trades 1 and 3 minutes. Just depends on how he feels the day is. Either 1 minute or a 3 minute. You know, I like the 5 minute. That's me. So this strategy, you could adapt it to whatever feel you got. Whatever feel you have, you can adapt it. You can make it as fast or as slow as possible. All right, so, and we went over this last week. This is my scan. The stocks that we trade, they have to hit my ORB scan. And it's looking for volume over 50K pre-market. This is what it looks like. Over 50K pre-market. This is what it's going to come up. But let me do this. I'm going to do this for 8. No, let's do 9. Let's see what comes up. Oh, PM. Should be AM. I'm sorry. So this is the only stock that was on our scan this morning. So this is why Roku was the only thing on my watch. And we didn't have anything on the earnings scanner, anything. I mean, Levi ended up making a halfway decent move, but it didn't have enough volume and it just didn't show the openings. But we'll look at that here in a minute. But the ORB scan, it's got to have 50,000 shares of volume, which this is the volume today window right here. So this had traded 384,000 shares, so well under the 50,000 pre-market. The gap up or down has to be over $1. So here's the gap. And that's the change from close. That's the gap. That's the percent. Some people look for percent. I look for $1. Because if I was looking for 4%, this would never show up. It's at 3.9%. So I'm looking for stocks that have got up or down over $1. Less than $150. Remember, stocks under 150, that's my sweet spot. Now, I do let stocks, $2, $3, $4, $5 stocks come up because I do have some that trade that. So you're going to see that come up on my scan, but I'm going to ignore them. Float is less than 500 million. So this float is 81 million. I like floats to be above 50 million and less than 500 million. That's my sweet spot on the float. But I will trade outside of that. Depends on the stock. But this is the filter. I like ATRs to be over $1. You can see Roku is almost $8. We need a solid catalyst and a good daily chart. That's what I'm looking for. So here's my vet process. I review the catalyst. Earnings, my number one. It's got to have good earnings, will be great. The drug trial results, and I can barely see it. This is a yellow check, which means caution. You got to be cautious when you're dealing with drug trial results. Most of the time, the companies are reporting their own findings, and sometimes that spikes the stock, and then you get in looking to go long, and the bottom falls out. So you have to be careful and pay attention to price action. So this is something that we can trade. I really like shorting these after the open when everybody realizes the news is BS and it comes back to earth. So I do like the catalyst. You just have to be cautious, a little bit extra cautious dealing with it. I like FDA approvals. This is approval from the Fed, the federal agency. So they're not going to put out a fake report. What you do have to be aware of is, did this approval come from another company? Can it be collaborated? So that's one thing you got to look out for. Analysts up and downgrades. Be cautious with that. Some of these analysts are being paid off to make it say whatever they want it to say. So you got to, I will trade it, but we do trade that with caution. The global economic news, like your trade news, anything having to do with the Brexit, anything overseas dealing with the economy, all of that stuff is good catalyst. Company generated press releases, got to be aware of those. You got to take them with a grain of salt. Buyouts, big X. Stay away from them. Sometimes they do make good trades when the announced buyout turns out to be bogus. Then that brings in some volatility. But if the buyout has been confirmed, then I would stay away from it. Most of the time, it just goes to a price and stays there. So, as a rule, I just stay away from buyouts. Then I review the daily chart, which you'll see me do today here in a few. So, we've got a plan. We got to have a plan going into this. So how do we plan to open the range trade? So how do I plan it? Number one, I have to establish my risk for that day. So on a day like today, my risk would probably be $100 to $150 per trade. If I have 2 losing trades in a row, I'm done. All right, so I know that's my risk for the day. So, then we have to kind of guesstimate the potential entry range because we have no idea where the stock's going to be after the first 5-minute candle. No idea. We have to kind of guess where it's going to be, figure out where the potential targets would be, where the potential stop would be, and any type roadblocks that we may run into. So to elaborate a little bit further on this, the stop, this is what confuses everybody. The stop. So the first thing that professional traders do when planning a trade is they define their risk. They lay out how much they're willing to risk to determine whether this trade is going to work or not. They have unlimited resources, so they're basically saying, well, how much do I want to risk on this? For new or smaller account traders, your number has to come from what percent of your account are you willing to risk on any given trade. So, and let's just take my $2,500 account for a minute. If I want to risk $150, that's 6% of my account. So the day is going to have to be a really good day for me to risk $150. Most of the time, on days like today, I'm going to risk $100. So, that's going to be my my risk, which is like 4%. So you got to define your risk ahead of time. You can't take a trade and then try to think about, well, how much am I going to risk today? Doesn't work. All right. Your stop loss point, it should be at a place where you know that if it hits this, your trading plan is dead. Your idea, your thesis, whatever you want to call it, is invalid now because the trade, the price has gotten to a certain level, is taking out some support or resistance, whatever it has done, that should be a signal to you to get the hell out of the trade. I know I say it nice here, it's time to get out, buddy. But how many of us are going to listen to something nice in a trade? If somebody comes to you and tells you, hey, it's time to get out, buddy, or it's time to get the hell out, who are you going to listen to? So you got to think about how you're going to tell yourself it's time to get out. So our stop losses, we need to have a max loss, and that is however much we're willing to risk on that trade. That's the max loss. So if it's going to be $100 for the max you're going to risk on any given trade, that's your max loss. Your technical is going to be based on whatever technical level you're basing your trade off of. So in our case, it's the opening range high or low. That's the technical level. And when we start looking at the charts, you're going to see. All right, so then we're going to think, what's the entry strategy? We already know. The opening range, high or low, is our entry strategy. And so it's either 1, 2, 3, 5, 10, 15, 30, 60, however you want to do it. So the high and low of whatever range, that's the support and resistance. That's the technical level that you're going to base your trade off of. Meaning, if you lose that technical level, the trade is dead. And it'll make, if it doesn't make sense now, it will when we look at a chart. Because we're going to go back over this when we get to a chart. Then, ideally, what are the targets? We want to use the potential volatility levels that we have for our targets. And these are called areas of support or resistance. So this is what we're going to get from the daily chart, pre-market. We're going to have these levels, the intraday moving averages. these are going to be areas of interest for us in terms of taking profit or our final target. So we establish the final target first. Where do we expect the stock to get to before it turns around? If the stop doesn't make sense as it relates to the target, let's say the stop is let's say you give them the stop $1, and then the profit target is 80 cents away. That makes absolutely no sense. So there's no trade. So if it does make sense, then you want to look for, hey, is there a potential profit target area along the way that I could lock in profit? If that's what you're comfortable with. Some people like getting in, holding it to the target, and getting out. They don't like scaling out, so to speak. Just like I don't like scaling in or adding back, I don't like it, so I tend not to do it. Some people don't like scaling out, so they tend not to do it. When I first started trading, I never scaled out. I held to the final target, and that was that. But then I realized the market started not being so good and it not getting to my target and following through, so I had to start scaling out, and I haven't looked back since. So what are the major roadblocks we can run into that we need to think about? We need to look at the market direction. Is this a big news event day like today? You know, what big news that we was on tap for us today? The China trade ordeal. What was the other one? The Fed chair was speaking somewhere. You know, these are things that we have to pay attention to because they could be major roadblocks to our trades. Holiday. Today was a holiday. Today was a Jewish holiday, and it is very well respected throughout the country. And so the volume was lighter, the volatility was lighter, and so we have to know these things. Just because it's not a national holiday doesn't mean that it's not well observed and respected, and so we have to pay attention to that. Yes, Matthew, it will be available for viewing later. It will be available for your viewing pleasure. All right, so now let's take a look at some charts. Well, so we got the elephant in the room. Let's take a look at Roku here. Oh no, I don't want that chart. I want Thinkorswim. I want the Thinkorswim. All right, so, and I'm going to just kill all these levels right now. So we'll draw them again. All right. So first thing I do in the morning, I look at where is this stock trading. That's why I have a 5-minute chart sitting over here when we pull this up, because I want to see what price range is it trading pre-market, so I can make sure I have all the levels I need marked around where we're trading. So a lot of people say, or not a lot of people, but some people say once a stock gaps, it negates everything behind it. But I'm from the school of thought that the market has a pretty good memory. And so I doubt if it's going to ignore previous levels. And you could see this 111.53 was respected here. It was respected here. You can see how we tapped it here. So this is a very well respected level. Even though we gapped and it was supposedly negated, you can't forget about that. all of these are real important here. So here's the bottom of the gap up. That's going to be important. And then we're going to look. That's the next level here. Okay, now we have 116.07, which is, I know I'm going to put it down here and change it so I don't have to fight it. Okay, all of these are potential volatility levels. Some people call them supply zones. They have all kind of names for them. 116.46. But they're just levels of potential volatility. Because you can have people, let's see, what is this? 116.46. You can have buyers and sellers there. All right, so we've got these levels here. Let me see. All right, so now I'm going to bring up a larger 5-minute chart for you. All right, so now what happened to my Tesla chart, man? There we go. So let's back this up a little bit. Not Tesla, man. What the hell? See how Roku has made me crazy? It's gotten me. It's driving me insane, man. All right, so let's say we're going to look at taking this trade. All right, which is pre-market. We're trying to figure out, are we going to take this trade? Okay, we've got this 111.53 level. Very significant. As you can see, we gapped up. It's been holding support. So automatically, the average person is going to think long, right? Look at the 50s trending up, the 100s trending up. Everything looks strong, so everybody's going to think long. All right, so here's the first 5-minute candle. Now, if we're thinking long, the first thing we have to think of is what range do we think this is going to open in? And so common sense for us would say, okay, here's a pre-market high. So let's change this so you know it's a pre-market high. So here's a pre-market high. Right? So we could logically think that, hey, we're going to open and we probably should get an entry somewhere in here. Now, where would my stop be? where would a logical stop be? Let's look at the pre-market low. Here's a pre-market low. So in a logical world, if I got long, this is where the average professional trader is going to put their stop if they take this trade long. It's going to be a few ticks below here. All right, that's the average trader. But for us, we're trading in small size. If I was trading in my big account and I was doing this for an all-day hold, my stop would probably be down here. But a lot of professional traders, they will use the lower pre-market as their stop. Even though this is where we gapped up, they're going to use this support because it's held support. So makes sense, right? Market makers know that. And guess what they do? They dip it below that level. No way in hell am I going to take this short knowing what I know on a 5-minute opening range low. No way. All right. So this is why this level is important. Why the pre-market low is important, and understanding where would you put your stop. Logically, where would you put your stop if you were going long on this trade? Right here is where most people would put it. So guess where the market makers are coming to pick up some volatility? Right where these guys had their stop. And then there's no buying in this until we get over the pre-market high. That's where the long trade comes in. And so we had to wait until after 10 o'clock for this thing to even trigger a 5-minute opening range. Now, here's the true 5-minute opening range high. This is the true opening range high up here. But when you have a long wick candle like this, that's like 2-3 times the body, I'm going off of the body here. But there was no trade until we got over the pre-market high and closed, because not one time were we able to close over this level. Very significant level. This candle couldn't, this candle couldn't. So now we're after 10 o'clock. After 10 o'clock, this becomes another trade. This doesn't become an opening range trade anymore. It becomes a trend continuation. But we would have been able to get in and still kind of use that strategy. But I wanted to use this as an example so you guys can understand what I'm talking about every morning. When I'm talking about the pre-market high, the pre-market low, when I'm talking about, where the potential this thing could go. When I say, man, the first candle took up my whole trading range. That means the first candle took up where I would enter and where I would take profit. Here this candle didn't really do that. It took out the pre-market high, which tells me, hey, we're probably going to be going long. And that's what we do. So this should keep you from getting faked out, taking a 5-minute opening range breakdown on a stop. Now you know what these market makers are doing. All right. And if you remember, you saw I got sucked in that Roku trade short. Those market makers knew exactly what they were doing. I wasn't the only one that got sucked in there. But it's just a matter of understanding what these big players are looking for. Giselle, did I going through that? Did I answer your question? Because technically this is a pre-market low, but once we bounced and we got the pullback, this is where the support came in. So this is kind of what I'm paying attention to. But technically this is the pre-market low where we gapped up. And this is where we started trading pre-market right here. Now the only time this will come into play is if this actually broke. If this actually broke down and we started establishing below this level, then I'm going to start looking at this. That'll be a profit target here. If this would have been a legit 5-minute opening range breakdown where we established below here, this will be a first target for sure. Because what we're doing is we're looking for areas on the chart that's more likely to be hit. Because theoretically, oh, okay, I'm sorry. I can be confusing sometimes. But yeah, that's it. All right, so I know we didn't have any really good opening range trades today. Does anybody have one that they want me to look at? Or I'll pick one more. But if anybody has one that they want me to look at, we can put up here and we can talk about it. Let me get my other chart back up here. Now I don't have it to where to go back till Monday. It will be today. Oh yeah, Levi. And I almost forgot about Levi. Let's take a look at that. Yeah, and RBT is a good one to look at too. All right, so Levi, this one was on earnings yesterday. I was very disappointed in the earnings, but you know, hey, it is what it is. So this morning we were trading up here. All right, so let's put in 1916. This is the 90-day from the daily. 1916. So everything starts with the daily chart. I'm looking for any daily moving averages. Now I know this is after the fact because these moved a little bit during the day, but we'll just put these up here for now. And then we're gonna look for the pivots on the chart, and these are areas where the price action changed direction. That's my definition of a pivot. Some people go out and calculate this and calculate that. No. To me, a pivot point is points on the chart where the stock changed direction. Because wherever it changed direction is where buyers and sellers are. That's a supply of buyers and sellers there. And that's what I'm doing every morning, picking these spots. All right. So let me bring up Levi. Let me bring up the other 5-minute chart here. Can make this Levi. So I didn't put Levi on my watch list this morning because frankly it pissed me off with all of this crap yesterday, and I didn't think it was going to give me a good move today. But boy, was I wrong. And sometimes I'm wrong. I can be wrong. All right, so here is first 5-minute candle. Huge 5-minute candle. What can you do with that? Days like today, when I see these huge candles, the only thing you could do is if you were trading a 2-minute or a 3-minute, you might have been able to get a really good move. But this was just too far from me. This one candle moved 89 cents. Guess what the ATR for Levi is? 73 cents. So, yeah, I think it was 70 this morning, 69 or 70. So this really took me, I like the move, but the big candle like this on a $17 stock, $18 stock, I just took my mind, I just like, nah, this is just not going to happen. And we had this level here. We had a daily level here that was like 40 cents away. And then another one that was like 30 cents away. So to me, there wasn't enough profit potential in this. Just like QE or QGEN. It just didn't seem like enough profit potential. But there was. It just wasn't clean to me. And so I personally stay away from these. But that doesn't mean that if you have a strategy and you're willing to get in these, like you could get in this 500 shares and take maybe, let's see, you'd have had to get in under here. So let's say 18.15, and that's what, 45 cents? So 250 shares times 45 cents, you would have booked $112. That's not bad. That's not bad if you're willing to put in 500 shares. 300 shares, 150 times 45, that was $67 for the first hit. It's probably not that bad. But these are the things that you have to think about when you get in. Okay? But this is a 5-minute opening range trade. Your stop has to be right here. If you claim this level, yes, this is where your stop has to be. Let's say this opened and it sold off, and let's say we got here and this next candle came back and closed above the 5-minute opening range low, and then the next candle made another high. That's the stop. That's the technical stop on 5-minute opening range trades. The technical stop on this is different than my trend continuation. Trend continuation is based totally on something else. Typically, it's based on the high of the previous bounce if I'm short, or the low of the previous dip if I'm going long. Here, it's set in stone. 5-minute opening range, high or low. No deviation from it. If I deviate from it, best believe at the end of the day I'm slapping myself. And I'm giving myself an F on execution because I did not follow my plan. Now, let's say, for instance, it closes above here, but it's below the 20. The 20 is like 3 cents above that. And it never pushes the 20 and it rejects. Or I'm not going to take it off because the 20 is sitting right there. It's so close that I'm going to let it try to break through another level of resistance. Now, if it's like 15 cents away, no, I got to take it off. And if it rejects there, I can always get back in. We can always stay engaged and get back in. That's the thing. And that's part of my MO and what you'll see every day. And let's look at IRBT real quick because we were looking at this too. Good fake out right here. Huge 5-minute candle, look just like, almost identical to Levi, right? Almost identical to it. This one just dipped below it a quick second, and then we were coming back. And it never looked back. Never did look back. Whenever you have a stock like this, and see, this didn't have volume pre-market either. So whenever you have a stock, like it puts in this huge 5-minute opening range, you can actually trade inside that range. But you got to make sure you have enough room. This is a scalper's dream here. This is a scalper's dream. But I don't scalp, so. But you can see this pretty much killed a 5-minute right there. It killed the opening range trade right there. Just like Levi did. It practically killed it, but then we had, it has some good selling pressure. Good, strong selling candles. And I typically don't like trading on these huge candles like this. All right, guys. Any questions about what we covered today? And like I said, every day in chat, every morning, we're going to be trading this strategy. This is the strategy that we trade at the open every day. So every trade is going to look different. So while we are looking at these stocks, the 30 minutes before the market opens, when you're going through your potential trade plans, that's when to ask questions on these. Because by 9 o'clock, I'm going to put out my watch list, provided that there are stocks to watch. And those 30 minutes between the time I put my watch list out and the market open, that's when we're planning. That's when we're planning. That's when we're getting our game plan together. That's pregame. And then all we do when the market opens is we execute our plan. In some stocks, you got to think of as an opposing team's defense. If that defense doesn't look like it can allow your play to work, then what do? You call another play. And in calling another play for us, we move to another stock. And we see what the defense looks like there. And if every defense is going to prevent us from scoring, then we stay the hell away from it. Your stop has to be above always. Always, always, always. Your technical stop on opening range trades are the 5-minute opening range high or low. So if it got bought back up, I would get stopped out on a claim of this level. Now my max loss stop is gonna be, let's say I got in 300 shares. My max loss stop is gonna be like 35 cents. So I'm gonna add 35 cents to my entry price. And if that doesn't make sense, then I'm gonna have to drop it to 200 shares. And if 50 cents is good, then I'll go in with 200 shares. But on a stock like this with limited moves, going in with anything less than 300 shares made absolutely no sense. So anything less than 300 shares, you walk away from that trade because you're not going to make money on it. So that's the thought process we're going to be going through every day. So I want you guys to understand that's the process that we're going through. That's the thought process. As we're vetting stocks, this is what we're looking at. What's the potential for that stock? All right, I'm going to stop the recording here because we're just over an hour. But you guys keep asking questions. I'll be here.